Michael Burry's big bet on inflation, The Big Short 2.0. Watch this before it's too late. The investor made famous by The Big Short has issued a dire warning about the state of the stock market. Michael Burry warns that the stock market speculation has reached levels not seen since before the 1929 crash, and assets are more overvalued than before the dot-com bubble burst. Today we're going to talk all about Michael Burry's big bet on inflation. So watch the video till the end, because today's video is going to be the bomb. Welcome to Investor Secret, your daily dose of wealth secrets. If you're interested in everything around big investors and their investment techniques, this is the place for you. Subscribe if you want to stay updated with all the investor secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Michael Burry warns that stock market speculation has reached levels not seen since before the 1929 crash, and assets are more overvalued than before the dot-com bubble burst. He also worries that geopolitical and economic strife exceeds that seen in the 1970s. His fear appears to be that we're fast moving towards an economic calamity, and government regulators such as the Securities and Exchange Commission and the Federal Reserve are taking no action to prevent it. In a tweet, Mr. Burry wrote, "More speculation than the 1920s, more overvaluation than the 1990s, more geopolitical and economic strife than the 1970s. He added, players grabbing the barrel of Kyle Rittenhouse's rifle while SEC Gov and Federal Reserve nod approvingly. He attached an opinion piece from the editorial board of the Wall Street Journal headlined, Rivian, the government unicorn, and subheaded, the EV truck maker is worth $120.5 billion. It has sold 156 vehicles. Electric vehicle manufacturer Rivian, backed by Ford and Amazon, went public this week, fast becoming the second highest valued automaker in the US after Tesla. Valued at more than $100 million by the end of its first day of trading, it has nevertheless only sold less than 200 trucks and makes almost no revenue. The company plans to manufacture more than 1 million vehicles a year by the end of the decade. On the same theme, Mr. Burry also alleged in a tweet this week that Tesla CEO Elon Musk might be selling stock in the company to cover personal debts and raised the possibility of the company losing up to 90% of its value, as happened to many firms in the dot-com crash. He noted that even Mr. Musk said that the company was overpriced in May 2020, when it was approximately 16% of its current value. The tweet has since been deleted. Mr. Burry is most widely known for calling the housing price bubble that developed in the 2000s. He shorted the housing market, selling market positions on the assumption that housing prices will drop, and when the market collapsed as he had predicted in 2007 and 2008, he made a fortune. The subsequent fallout of the housing bubble bursting saw 3.8 million Americans lose their homes and triggered the global financial crisis that rippled around the world, leading to the Great Recession. Mr. Burry also focused on inflation this week, noting that the current high rate of inflation is effectively depressing wages, which, although growing, cannot keep pace. He adds that as a regressive tax, it hurts lower-income people the most. Two of America's most respected investors, each with their own claim on the affections of cryptocurrency bulls, are locking horns over their conflicting views of the economic future. On one side is Cathie Wood, head of ARK Invest, whose ARK Innovation ETF holds bullish positions on companies like Tesla and Coinbase. On the other side is Michael Burry, whose 2007 bet against the housing market just before it triggered a financial crisis and the Great Recession has turned him into a near-mythic doomsayer. It was reported that Burry, through his Scion Asset Management Fund, is betting against the success of Wood's Innovation ETF to the tune of 235,500 shares shorted, or about $31 million worth of put options. The conflict has been largely framed as one between data-driven fundamental investing and more ideas-driven big-picture approach. Analysts who agree with Burry's bet have pointed out the massively inflated price-earnings ratio of ARK holdings. That debate is exemplified by ARK's very large position in Tesla, an automaker whose market cap is larger than the next 5 largest auto companies combined, yet only occasionally turns a profit. Wood, as chronicled in CoinDesk's in-depth profile, was vaulted into the upper tier of investors by her unwavering faith in Tesla during the company's dark stretch in 2018. Even before shorting ARK, Burry had a huge $534 million short position against Tesla, aligning him with the Tesla Q skeptics who believe that Elon Musk's big promises about things like full self-driving are hot air. But this is just the sexy philosophical surface of the debate. Look closer, and the face-off between Wood and Burry is about something both simpler and bigger. They're different thinking about inflation. Burry, as befits his doomsaying reputation, is a notorious inflation hawk who in February compared U.S. monetary policy to Weimar Germany. That's a widely shared perspective among Bitcoin advocates. Burry believes inflation spells doom for the kinds of companies ARK holds, including, somewhat ironically, Coinbase. Inflation is a threat to the valuation of growth or innovation stocks, largely because even moderate sustained inflation would lead the Federal Reserve to raise interest rates to rein in the money supply. Because so few of ARK's portfolio companies are profitable, they can be expected to need continued cash through loans or other financing as they grow. Higher base interest rates make the capital more expensive. It would have a similar or even stronger effect on venture capital and private equity hedge funds. Wood, meanwhile, says she now believes current inflation is transitory, correctly pointing out that commodity and used car prices are crashing back to earth. In a tweet thread responding to reports of Burry's short position, she argued the equity market is likely to reward disruptive innovation strategies once again when headline inflation breaks and/or fears of recession increase. This is perhaps a bit surprising from Wood, who had supported the re-election of Donald Trump, and so might be expected to join the mostly right-leaning inflation hawks. Her contrary position might show a flexible mind willing to reassess conditions on the ground. On the other hand, it might be a matter of convenience, since predicting low inflation makes her fund's thesis look better. And Wood certainly has a motive to talk her own book. After a sustained run of impressive annual returns around 30%, ARK returned a staggering 150% in 2020, thanks to positions in companies like Zoom that saw outsized gains during the pandemic. That success has both grown the balance sheet and attracted more capital, and ARK now manages nearly $22 billion, up from $9 billion in October of last year. But Wood's impressive returns have, at least for the moment, dried up. ARK is down 6% so far this year, while the Dow Jones Big Cap Index is up 20%. Ouch. Wood signed off a long rebuttal of Burry with this: "I do not believe that Burry understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. For ARK, those fundamentals could actually include continued heavy U.S. public spending, as long as Wood and her fellow travelers can coax enough of that cash into their own high-risk bets." Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Investor Secret. Bye!